My name is Ingo Mueller. I'm the CEO of Capital Fusion Group. We're a financial advisory firm and principal investor. Today, we're going to talk about the importance of aligning the interests of both management and principal investors, or investors as a whole. Often, people or companies are very influenced by the availability of capital, and therefore don't take the time to consider the fact that the investor's interests may not align at all with that of management or the founders of the business. Therefore, it inevitably leads to future problems. So we take a lot of time to understand both what management and founders are looking for, but also what those investors are looking for. A few factors to consider. If a management team has a short-term focus and investors have a long-term focus, probably not so much of an issue because investors are adaptable, so long as the financial returns that they're looking for are generated. However, if management is looking for a long-term investor and they end up with a hedge fund who's prepared to invest, and that hedge fund is looking for short-term investment returns, often that's a recipe for trouble. Therefore, it's very important for the company and the investors to sit down and understand each other's respective needs and wants so that you avoid future problems down the road. Another thing to consider is what investors are at the table. Different investors have different profiles. For example, a venture capital investor has a much nearer term focus on the business and a longer term view. A private equity investor is looking for a company in which they can work with, keep it private for a prolonged period of time, and then seek either public exit or a trade sale. Institutional investors or hedge funds are often motivated by near-term liquidity and therefore have a different investment profile. In each event or in each circumstance, management has to consider who they're facing across the table and their needs and wants.